Hello, everybody. So on this channel, I talk a lot about my main bets: MicroStrategy, Bitcoin, Tesla, HIMS. I talk a lot about these stocks, but I do own other stocks. I have a full portfolio. And I talk about these a little less, but I like them a lot right now. I think that these four companies offer cheap growth. They offer a really nice upside. And I want to give you a quick update on these companies that have all had full deep dives on my channel. I've done full deep dives, multiple ones on each of these four companies: Celsius, Nebius, CorMedix, and the Real Brokerage. So let's get started with Celsius. So Celsius, to me, right now, is clearly the category winner as far as growth goes, right? Market share is still Red Bull. It's still the biggest market share. Monster, is still doing very well, at least in the US. But to me, as far as growth goes, as far as market share growth goes, Celsius is doing excellent, doing very well. They don't need to dethrone Red Bull or Monster to win. All they need to do is focus on women and focus on really anybody who's not a hardcore energy drinker, who's not going to be appealed by the extreme marketing of Red Bull or Monster. That's all they need to do to win, and I really see them as winning right now in the US. They are all over here. I mean, so many gas stations have the big Celsius signs, the neon signs, even local non-brand grocery stores have Celsius. It's just everywhere in the US. I was at Target the other day. Alani was entirely sold out. It was pretty crazy. Maybe they hadn't restocked the shelves or something. But Alani was the main threat to Celsius. And Celsius bought Alani. Celsius bought the main threat. Therefore, there is threat no longer. There is Red Bull and Monster as a threat, but Red Bull and Monster, if you look at them and you study them, they're stuck in thinking, oh, well, all I need to do is make the Red Bull can pink. And I'm going to make the Red Bull can pink, and I'm going to sell to women. Anyways, that's not going to work as well. The disruption of coffee continues. Sorry, Starbucks, right? Starbucks is not doing well. A lot of young people are moving away from coffee. Even if young people are saying, oh, I want to have coffee, they go to chains like Dutch Brothers, which is not really coffee, right? We're a little far from the little espresso or even the black coffees of America's gas stations. People are moving away from coffee. They're moving towards energy drinks. Energy drinks are a wonderful business, as the total performance of Monster has shown before, and any soda company has shown before. Why is it a wonderful business? Because you sell caffeine. Caffeine makes people addicted. People, if they have caffeine, they keep having caffeine. That's the way it works, right? That's why it's a great business. It's a recurring business. People, when they're hooked on Celsius, they keep drinking Celsius. And Celsius has a lot of caffeine, and so does Alani, and so does Diet Pepsi. Right? That's why people keep going back to Pepsi. So that's the way it works. So I very rare that I would agree with a legacy institution, but Goldman Sachs is saying 20% market share by 2026 and enormous international expansion. I agree with Goldman Sachs. Pretty rare, but I would agree with that legacy institution. I think the market share could be higher. I used to say I think Celsius is going to be the third play, but with enough time, they could potentially be bigger than Monster with enough time. I don't know about Red Bull. Red Bull has a very long legacy, and Red Bull is a private business. We don't know too much about Red Bull. Anyway, new thought too on Celsius. Well, the first thought is, remember, in my view, the stock is cheap, trading EV over GP over RG of a 0.43. Now, beverage companies tend to be well understood with the market, so they trade at a little premium. EBITDA margin is excellent, 28%. This is a cash machine. Rule of 40 is 63. 0.43 is still cheaper than what I consider cheap, which is under 0.5. If your stock is trading under 0.5 on my metric, I consider you cheaper. I do want to point out the chart. I usually don't really care about charts, but before the Alani acquisition, this stock was more expensive. So, and it traded almost at 100, not quite, but we got very close to 100, and then it dumped, right? And they did the Alani acquisition. So now you have a more solid company whose main competitor has been taken out, and who is trading still 40% from its highs. So I think Celsius has a lot of catching up to do. One final thought I was making about Celsius is, you may have seen their ads recently. They've been playing these interesting. I'm going to call them interesting ads. This is not a product I would buy, but I'm going to find them interesting. Spritz Vibe, Playa Vibe, Cosmic Vibe. This is a X ad. They've been playing these ads all over. The point I want to make is how closely linked Celsius is to social media, and a lot of the businesses of today, selling products of today, are linked to social media. Think about that. Red Bull has essentially one flavor, Red Bull. And I guess you have the sugar-free version and the sugary version, right? Monster maybe a little more flavors, but this is nothing compared to Celsius. Celsius has 29 flavors, and they do limited edition all the time. So this reminds me a lot of, say, fast fashion, who would move quickly through cycles, and then you would have like a T-shirt that's only available for 3 weeks, so you gotta go ahead and buy it. So Celsius as a way to develop a lot of traffic, to create a lot of traffic in stores, because the limited edition Spritz Vibe Celsius is out. And it's only going to be out for the winter. So you better go ahead and buy it, right? That's the whole idea. You create even more of a hook, even more of an addiction to a product, especially whenever you introduce new flavors. This is also something to consider. New flavors equals, maximum marginal utility. You may make the best pasta in the world. If you've been having pasta every day for 30 days, that pasta is not going to taste very good after 30 days, and you can do that for any beverage. So with 29 different choices and them cycling through the choices all the time, you pretty much create novelty in the product very easily. And there is something fundamental in perhaps the way they manufacture the product that allows them to iterate so fast and to just change the marketing. In many ways, Celsius is a marketing machine. This is a little bit similar to Hims. Hims is also a marketing machine. Marketing plays an essential role in I think, keeping up the sales and increasing the sales. So I see them winning. I'm happy to own it. And frankly, I've tried quite a few different Celsiuses. I like the taste. I think, my coffee intake has been reduced because of Celsius, and I may not be the only one. I like the taste, quite frankly. I like the taste much better than Red Bull. Red Bull leaves you that aftertaste that I guess some people like, but it's so, that aftertaste of Red Bull, I don't know. Anyways, I like the taste of Celsius, but it's all very personal, right? So anyways, let's move on. Let's talk about Nebius. Totally different sector. Nebius. So a forward, if I may say. AI is real. AI is not hype. AI is going to explode. We are at the beginning of AI. I consider the indices to be undervalued, and I consider NVIDIA to be undervalued, right? I could have talked about NVIDIA today. I need to cover NVIDIA again. AI is not hype. AI is real, and I think a lot of indices who have gone up a lot because of AI. When people go on CNBC and tell you, the indices, are overrated or too expensive, they're not taking into account that the top company in the indices is NVIDIA, and I consider it undervalued. This is going to be a huge, huge deal. And existing data centers, by the way, they're not meant for GPUs. They're meant for CPUs. They're meant for the old era stuff. New data center will need to be built. Bigger data centers with access to more energy will need to be built. And so there is a gold rush in building these new data centers. We saw CoreWeave, we saw TeraWulf partnering with Google, and of course, I got lucky on that one. I was very happy. But that's Nebius. We saw Nebius partner with Microsoft. Absolutely insane. $19.4 billion contract over a 5-year period to build and run data centers for Microsoft, most of which will be built within the next 12 months, starting to get revenue from this deal as early as this year's end. This is what they said in their announcement. So you're looking at Nebius. Nebius's rise is more than warranted here, because if you take 19.4 billion and divided by 5, this was my video that I had made on the gigantic Microsoft AI deal, as I called it. If you go look at this video, 3.88 billion a year is roughly what this deal accounts to. And you're looking at a company where trailing 12 months revenue is 249 million. So I don't really know what growth rates to put in Nebius, I know my last analyst number I had was they expected 354%. That's why I still have it as 354% next 12 month revenue growth in my spreadsheet. But that's wrong. That number is wrong. If I do, a little simple math, and I calculate it, I get about 1,600% revenue growth because they're going to do 4 billion. They're going to be doing 4 billion. So that's what I had calculated in this video. Go back in this video if you want to see my calculation of it. The point is we're going to have more than 1,000% growth as this deal is materializing, because that's going to be 4 billion a year. 4 billion a year, and we have right now 250 million in revenue. So when I input this in my spreadsheet, I get absolutely nuts crazy numbers, and I get an EV over GP over RG over 0.12, which is very cheap. And I get a rule of 40 of 1,400, which is super, super high. So I like Nebius very much. And that's not it with Nebius. Now, of course, they have different VC investments. Sure, they have like a self-driving division. Don't really care about that. The one, or like their online training division, they have some training of coders division. Doesn't matter as much. What matters to me, though, is their 28% ownership in ClickHouse. 28% ownership in ClickHouse. Now, if you, I'm not a coder, I'm not a data scientist, but the little research I do with ClickHouse, in many ways is comparable to a Databricks, comparable to a Snowflake, comparable to a Redshift, right? Now owned and probably closer to a Redshift, because Redshift was open source too, right? When IBM bought Redshift, that was open source too. Or MongoDB. MongoDB is a file-based database, not a column database. So from that standpoint, Snowflake is a little closer, right? But the point is that these database companies are very expensive companies. If you look at Snowflake, you're looking at a market cap of 76 billion. Granted, Snowflake is very overvalued. I'd be the first one to say that. MongoDB, better valuation, 25 billion. So they own 28% of a company that could be worth tens of billions of dollars. 28% of a company. Imagine this company is worth 30 billion, 10%. That's 10 billion, 28%. Let's round it up. That's 10 billion that they own. So really in the money that they have, enterprise value is 26 billion. But maybe fast forward 12 months from now, when these databases are even more important, maybe you have 10 billion worth of value in ClickHouse. So it's like, so you're looking at a business that has a lot of value. It's as though it is building a AWS of GPUs for GPU data center, but you just have that part of a business, and you have a mini VC arm. I look at it as this company could be a mini big tech. That's what it could be. It could be a mini big tech, and I think they're much further ahead because of their AI and their software integration. They do their own software; it's all fully integrated. I think they're much further ahead than, say, a CoreWeave or a Bitcoin miner moving into that sector who may not have the software. And of course, the relationship of a CEO of Nebius, former CEO of Yandex Russia. Clearly, the peer group of the CEO of Nebius is the CEO of big tech in America. That's his peer group. Yandex was an enormous success story. So the value of the relationships of a CEO are not to be overlooked in my view. I'm happy to own Nebius. Psychologically, it's tough to add when the stock is trading above 100. But if there were to be some sort of a scare, I would be very interested in this company. Anyways, moving on to another stock that I like very much. I've been pounding the table on this one. It's CorMedix. So let's talk about CorMedix. So what are we talking about with CorMedix? CorMedix is a catheter solution lock. It's a vial that whenever you go to dialysis, you have diabetes. If you have diabetes and you've had it for a while, you're not doing too well with your management of diabetes, you may have to go get dialysis. When you go get dialysis, you sit there for an hour, they do the dialysis, and then you go back home with tubes coming out of your chest. Catheters. These tubes can get infected. When these tubes get infected, that costs $100,000 for the taxpayer, because you have to have an emergency hospitalization and even worse, sometimes you may die because of that hospitalization, right, and the infection. So CorMedix, it's a $200 vial. You take the vial, you drop it into the catheter, you don't get an infection. Or they don't say it like that, but you're way less likely to get an infection. What does that tell you? Medicare and insurance companies are very happy to pay the $200 because they realize that if you get an infection, it's a $100,000 bill that they have to shell out, right? If they pay the $200, they're fine with that. So it's an anti-infection company. Of course, they're growing fast in dialysis, and there's only 2 companies in dialysis that you can sell to, right? It's Fresnicius and DaVita. And so, they don't name them, but when I read the call, I can figure out it's both of them. They're rolling out at both of them, and now they're expanding their market on the main business, the anti-infection product. They're expanding their market to TPN. So TPN is when you're out of the hospital, sometimes you're recovering from surgery, you can't eat. When you can't eat, you're fed with a catheter. You're being fed with a catheter. Same problem. You can get an infection. It can be very costly to the taxpayer. So they're expanding to that. And recently, and that's a huge market, by the way. And insurance companies typically don't mind paying for this type of product because it's kind of an ancillary product. You're not trying to sell a $50,000 drug. You're trying to sell something that's a few $100. Who has a clear return on investment. Anyways, they acquired another anti-infection company, antifungal, antibacterial. You can see this is the portfolio that they acquired, right? Their Resio being kind of their best drug from what I read in the presentation. Anyways, this could take a while to analyze. The point is, see, UTI, right? Urinary tract infection, big deal, right? It's an anti-infection company. They're trying to turn themselves into a company who sells meds and solution locks and antifungals to avoid infections. So it's I mean to me it's the sweet spot to me because hospitals, health organizations, they are highly incentivized to reduce the number of infections. Because if they do that, then they get more money from Medicaid or Medicare or whatever, and their benchmarks and all sorts of healthcare certifications and, best hospital rankings, all of that takes into account infections and how many infections you have, and it's not just about, cleaning your hands every time you enter a room, getting gloves every time you enter a room. It goes beyond that. And I think they have a very interesting positioning in the marketplace, but of course there's a lot of great medical companies. They are not all cheap. This one is a great medical company, I think, but it's dirt cheap, right? If it was trading at 0.5, I wouldn't be discussing CorMedix. I'm discussing CorMedix because it's trading at a 0.04, right? So before it gets back to a 0.5, you may have a 20x in the stock price here. But that's not what I'm saying what's going to happen. I'm saying this company is cheap, and I don't understand why it's so cheap. I really don't get it. Rule of 40 is 221. Actually, the company's been doing well. If you look over the long run, like most companies in the 2020s era, innovation, Mr. Market sold off all innovation, so it had a little valley of despair of its own, sure, but it's been recovering nicely. And it's I like CorMedix a lot. This is a company that I'm gonna keep covering for this channel, and we'll see. We'll see what happens with it. But it's a nice position for me now too. I like it very much. Last company. And this company, me picking this company is me sticking to my spreadsheet and sticking to discipline, trying to have a little bit of discipline. So this company is called the Real Brokerage, REAX. The Real Brokerage. The stock ticker symbol is REAX. I like both. Real REAX. I don't know. I kind of like it. Anyways, what do? They are a fully online app-based broker. They're a digital broker, fully online app-based broker. That's what they are. They are that. They're a national brand, national broker, but they're fully online, very little employees, no physical offices in your town whatsoever. You will never find a REAX physical office in your town. So what are they trying to do? They're trying to disrupt the local mom-and-pop brokers. So your Keller Williams, your Century 21s, your Howard Annas, depending on the part of your country, brokers have different names, whatever. They're trying to disrupt these brokers, and typically these brokers, they're companies that have been around for a very long time, sometimes 50, 70 years. They're trying to disrupt the broker. So they're going after the broker market a little bit different from Open Door. Open Door is entirely trying to disrupt real estate agents and, replace real estate agents by people giving tours of houses for $25 an hour, right? That's the Open Door business model. But Open Door is capital intensive. That's why Open Door exited. I know right now Open Door is really hot, but it's squeezing its hype. It may be. I need to analyze Open Door again, but I know that I've exited Open Door a long time ago. I used to like it very much. I need to analyze it again, especially now that Carrie Wheeler is gone at Open Door, which it's. I need to analyze it again. I'm withholding judgment on Open Door. What I'm trying to say here is I prefer REAX right now because REAX fits neatly into my spreadsheet. Open Door never fit into my spreadsheet because they were so capital intensive, so it never really fit into my spreadsheet. I like REAX. I think real estate agents are going away eventually. I'm not sure it's during this real estate cycle that they are going away. I think the way REAX is dealing with disruption in real estate is very interesting because they are focusing on only attracting top agents. If you look at the way the commission structure works at REAX and the way they've organized it, it really looks like they're going after the top agents, and they're not going after the amateur real estate agent. And if you know anything about real estate, it may be different in other countries, but half my viewers are in the U.S. An enormous amount of real estate agents in the U.S. are amateurs. They're amateurs, right? Very rarely, real estate professional agents are, I would argue not the norm. There's a lot of amateurism, people who think it's an easy job, it's an easy way to make money, they become a real estate agent. And because of that, there's a lot of turnover, real estate agents. Brokers have to spend a lot of time with turnover, and there's a lot of mentorship, and there's a lot of hand-holding, as I'm going to call it. And typically it's the senior agents at your local broker who are going to mentor the junior agents. The junior agents, maybe are a little overused sometimes, anyways, it's a ruthless industry. It's a ruthless business. The point is that REAX is trying to hire out the top performers from your local brokers, and they're hiring them out by giving them a much greater commission and giving them a bigger share of the cut. And they've been successful at doing that. And these brokers now change, and they're like, well, okay, I'm changing broker. I'm a REAX broker because my REAX broker lets me keep most of my commission. And by the way, in the fee structure, REAX, I think it's after something like $10,000 or something like that. After you've made this much, those top agents keep their entire commission. They keep the whole thing. And then REAX makes money on fees. Anyways, the details are the details. You can look at my full analysis on REAX. I made a full analysis on the stock. I think it's relatively undiscovered. Very few people still know about it, but it has grown like mad during a huge downturn in terms of transaction count. Remember, realtors make money on transaction count, not necessarily transaction cost. Count matters much more than cost when you transact real estate, right? That was a famous chapter in Freakonomics. If you've heard of the book Freakonomics, they had a famous chapter about that, about real estate agents. They have to prioritize volume and not really prioritize percentage of commission or like high price, right? Anyways, done with this tangent. The point is the revenue has grown really, really fast, 50% a year, roughly, and they've kept that up for like 2.5 years, about roughly 50%. You can see, we're and they grew actually faster too in the earlier days. So an analyst is still predicting 50% growth, and they're doing that in a market that is struggling. And so how are they doing that? By hiring out the top agents. And this stock has already gone through a mini step change in valuation. So it's already gone through a mini step change in valuation. We were in the 1s and 150s. Now it's like in the 5s, a little less than 5, kind of a cheaper one right now. We could go another step change. And, maybe right now it's trading in the 5, maybe 2 years from now it trades in the 20s. So that's kind of my hope with this one. I like it. EV over GP over RG is a 0.12. Rule of 40 is a 53. And it also helps when in my overpriced Texas neighborhood, I haven't seen an open door sign in 3 years, but I've seen 2 REAX signs in my little part of Texas neighborhood real estate, crisis. So anyways, I like it very much. So anyways, this was not investment advice, no financial advice ever on this channel. It's just entertainment on this channel. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.